Hello and welcome everyone. Today we have lesson number 4, how to make money consistently. I hope you have been enjoying the videos. The previous video on video number 3, lesson number 3, we talk about the concepts of making money on the long side and on the short side. People don't know that you can actually make money on the short side when the market is crashing. People keep only thinking that you can buy and buy and buy and hope that the market will always go up, but that's not always the case. So I show you how to buy long and how to sell short. And today's lesson we're starting to get into how to make money consistently, and today's topic is risk reward ratio, money management rule, and trading journal. These are key elements for you to consistently make money. We'll give you some strategies, and the next video will also have more precise strategies that you can apply on the everyday trading experience. Now let's get to it. I'm not going to give you, like you have seen before, I go right to the point. I'm not going to give you a 1 hour, 5 hour lecture about how to make money, how to trade, what strategy it is. I'm going to give you this lesson in 1 page about money management, trading journal, and risk to reward ratio. Some people write, a whole book. No, we don't need it. I'm going to give you 1 page so you can look at it and you can memorize it. All right. So here's the formula for making consistent money. Some people think that you need to have a super brilliant system. No, that's not true. Just look at this perfect example here. In a bad day, week, or year, with a good risk management system, and your system only makes about 50% or is only correct 50% of the time, but your R to R is the key here. You are risking $1 to make $1.50. Okay, so putting in real dollars, if you're risking $200 and you are willing to make, or your targets are $300, which is 1.5 at your risk, you can actually make consistent money. But think about it, you're only winning half of the time. Okay, so let's take this as a perfect example. If you have 10 trades and you have 5 losses and 5 wins, this is what you're going to come up with. So 5 losses, you actually lost $1,000. But if you have 5 wins, you actually made $1,500. So you're still making profit. Okay, so here's the key. Make sure that you're risking less than what you are willing to make. This is the key. Now, money management. This is what every book and every guru out there will tell you. Money management is also really important. Only risk a maximum of 2% of your total account. So, for example, for every trade, if you're risking, let's say you have an account of $10,000 and you're only risking 2% on this trade, your risk should be no more than $200. Now, everyone is a little bit more risk taker. Some people are more risk takers, some people are less risk taker. I like to go between 2 and 5%. That's my risk tolerance, okay? But the books out there says 2. And if 2 is your number, you use 2. If not, if you're starting out, you got to start with the lowest one. And I have been trading for a while, so I like to put in 5% risk total. How about a trading journal? Okay, so this is also critical to have a trading journal. You need to know what is it that you're buying, what is it that you're selling, and what price. Okay, so this is like a business, keeping inventory. If you don't have an inventory, you don't know what you sold, you don't know for how much you sold, you have no idea how you can actually predict the future or make new orders or adjust your inventory for the next month. This is a must so that you can continue to improve. Okay, so let's see this in real life. I like to have hands-on training. This is our focus. So here is a trading journal, and let's take this in perfect. I will leave some links below on specific trading journals or templates that you can use it, or you can just copy mine. This is actually a great example. If I'm trading cryptocurrency, okay, so this is my coin. I have the list of all the coins that I have traded. I have the buy price, I have the targets, the stop loss, sell, and if I did good or if I did bad, my profit and loss. So let's pick the first one. I highlighted the capital invested because look at here. My capital invested is either 0.3 or 0.2. What does that mean? That's only 30% of my account, or 20%, or 1%. Oh, sorry, 10%. So what does that mean? If I have $10,000 on this trade, I'm only putting in $3,000, and out of the $3,000, in this case, if you look at this is my buy price, this is my sell price, my actual loss is only 6%. Okay, so much less than my total account, so that you're not completely exposed. If you go 100% and the market seems to go crazy, or there's a bad news or bad event, and it happens to go down 50%, you just lost 50% of your capital. So you do not want that. You do not want to put in 100% of your capital on every trade. You want to have 3 to 2. This is an example that have worked for me, and you have to suit it to yours. Okay, so look at, I have all the price targets, the stop loss, which is critical. In this case here, I had a 6.27% loss, and on this other case over here, it was a 36% gain. So you can see that my gains are higher than my losses, and that's how you keep consistently. Okay, all right, so this is it for risk management trading journal. Now, what is the homework for you? This is the homework. I'm going to give you the most basic trading system that you can think about. There's a moving average, and I'm going to give you a link to great insights on the top trading strategies, or trading indicators. Top trading indicators. If you don't know about indicators, this is a more advanced course, but you can go ahead and take a look at it. This is technical indicators, what they are, what their meaning is. So this is the trend indicators, moving average. This is what people look at the most, right? Have mean reversion, Bollinger Bands. You have the RSI and the stochastics. You can read what they are. I'm not going to give it to you. I'm going to give you the most simple one. You have a indicator called EMA. This is the exponential moving average, and I have plot over here the 20 EMA. And the most simple one that you can try on your own to try your risk to reward ratio is a simple: if the price closes above the moving average, you enter long. If the price closes below the moving average, you go short. And then you apply the money management rule so that you can see if you're doing well. This is the key. This is the formula for success, but you need to back test your strategy. This is the most basic strategy I'm showing you, and you should back test it to see if the strategy you're going to apply is going to be successful in the long run. So for example, pick the Apple symbol, plot that on your favorite platform. I'm using TradingView over here. Plot that and see if you enter every time it goes across above the moving average, and you're risking, let's say, 5%, and you're willing to gain 7.5, or let's say you're risking $5 to make $7.50. And then you can see that some work very well, some may fail. So you need to do this on several years to see if it's successful. Some say that, oh, I can just cross above and leave it. Well, there are times when the market goes sideways and they can chop up your money. But the next lesson, we're going to talk about more specific support and resistance and key strategies that people really use on the day-to-day. So hopefully you have enjoyed, and I'll see you next video.